Bruce Brown with your daily mortgage market update. It is Monday, and I want to go back to last week for a second because we talked about how mortgage rates have risen the last couple of weeks and bond prices have really taken a hit over the last couple of weeks. Friday was the first day we saw any kind of decent positive territory for bonds over the course of the last couple of weeks. And as I mentioned, last week was very devoid of any type of economic reporting. That is going to change dramatically this week. As a matter of fact, we've already had one report that came out this morning that was a real shocker. Existing home sales were expected to decrease at a rate of just under 1%. It actually reported an increase of 6.5% last month. That's very, very surprising. And this is the type of thing that, as I mentioned last week, economic news, bad economic news, generally is good for mortgage rates. And when you get good economic data that says that, hey, there may be a recovery in place or something like that, that can actually hurt mortgage rates. So right now we already had a big surprise. For housing, it was an excellent number this morning with existing home sales rising. Now, something else I want to talk about, and this is something that's happened in the last week that you probably haven't heard about on the news. The new Treasury Secretary that we have coming in is accusing China of manipulating their currency value. And this is very important when it comes to mortgage rates. And I've written about this today in my written blog, which you can access at dollarsandhomes.com. I'd like you to take a minute maybe and read this a little bit today. China is one of the largest buyers of mortgage-backed securities that the United States has. They buy our securities. If China gets upset about what the U.S. says about them or some of the things the U.S. does, and it causes them to quit buying the securities that they do buy so heavily, this could have a dramatic impact and cause interest rates to rise. So we have to listen very carefully to something certain people say a lot of times to figure out which direction interest rates may head. Now, again, this week there are a total of 8 economic reports coming out, a couple of which have already happened this morning. We've actually got 2 Treasury auctions this week, and we also have a Fed meeting this week. Now, the Fed meeting is going to adjourn on Wednesday, and this is going to be very important because, as we know, it's not what the Fed does, it's what the Fed says that can have a big impact and swing markets one way or another. We don't expect to continue to get a slew of good economic reports like we have this morning already on existing home sales, but you just never know. And we'll have to listen to what the Fed says. The word we don't want to hear this week as far as mortgage rates are concerned is we don't want to hear that the Fed has concerns that inflation is creeping back. If we hear the term inflation is creeping back into the picture, they have a concern for inflation. That will be bad for mortgage bonds. That will also cause mortgage rates to rise. So I just want to give you a little heads up on what to maybe look for and listen to this week. Now, one other thing I want to talk about real briefly this morning. If you're a real estate agent out there, if you're working with new builders, new construction, you're a real estate agent who's got listings, you're a real estate agent who's maybe working with banks who have some new home foreclosures, we are considering broadcasting our Saturday radio show, Dollars and Homes, from people's homes, doing live open remotes, subdivisions, places like this to try to drive traffic to these homes, doing an open house weekend event type of thing. And this is something we've been kicking around on our radio show. And if you have any interest in learning more about this, if you've got some properties you think might benefit from this, if you're working with people that you think may have an interest in doing something like this, please get a hold of me. Again, you can always contact me at Bruce@dollarsandhomes.com. That's Bruce@dollarsandhomes.com. Drop me an email or give me a call, 816-468-8600, and I'll be sure to answer any questions you have about this. Folks, I'll be back again tomorrow with another update. Let's cross our fingers and hope we have a great day in the mortgage world today.